We lift our 0 to 3 month price targets for gold and silver by 9% and 16%, respectively, to $2,428 an ounce. We further lift 6 to 12 month topside levels towards our bull case scenarios to $3,032 an ounce.
Welcome to the Morning Markets and Metals with Vince Lanci, where each day he brings you the precious metals and financial news to get you ready for your day. And now, here's Vince.
Good morning. I'm Vince Lanci, and in today's market rundown, we will discuss Citibank's new price targets for gold and silver and look at a new report by BlackRock, a macro report. It's actually very good. It's a weekly, but this one's very interesting. Then we'll look at the news. First, let's look at the prices. I'm going to leave Chemical up there while we do this. All right. And we can get rid of gold for the moment. Leave it up on a monthly for you all. Here we go. The dollar is down 10 at 104 spot on one. 10-year yields are slightly lower, so we're getting a little bit of a retracement at 438. The S&P 500 is 5209, up one handle. The VIX is 15 spot 29, so that's backed off some. Gold is another new all-time high made last night, trading 23.54, up $15. That's 65 basis points. Silver hovering around $28, 27.97, up 13 cents. Copper down 11 basis points at 426.90, so a little less than a penny. Oil 86.70, stable, down 5 cents. Natural gas 180. Well, that's a new price. We're getting close. It's my pet project right now. Up 2.5%. Bitcoin is down 750 at 70 spot 879. Ethereum is 36.35, down 1.5%, down 58 points. Platinum, palladium both up uniformly. Palladium is up 18 and change, trading 1061, and platinum is 979, up 20. When I say uniformly, I mean in percentage terms, not in dollar terms, relatively speaking. Grains, down, 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 small, small, medium. So wheat is trading 56.70, down 6 cents, over 1%. Something's going on in Europe, probably. And let's get going. Let's start with Cameco, right? So we talked about them about a week ago here, and Goldman Sachs had a report out, and we gave you what we thought that meant. And if you, well, it's bullish, obviously, and it's the good kind of bullish. But what we talked about specifically was tactically that the market had just made a big low, a big dump after making new all-time highs and was in here somewhere. And we said there's going to be buying, it's going to go up, but it's going to be met with selling all the way up. And you want to watch how it behaves. Now, and I said to expect that last time there was selling here, right? So will there be selling here this time will be the problem. We have our answer. We have our answer. This is tactical. This is not a long-term thing. But tactically speaking, the selling is still there. Here's what I mean. Right? Someone sold it here. Someone sold it again. Goldman's report comes out. Market starts to climb. Sellers are in this candle. They're still there. I hope it goes up so I can sell. They start selling it. Now it gets up to here. Start sniffing out if the selling's there. And the first time up, the selling is still there. If the market proceeds to stay this healthy for, let's say, the rest of the month without touching that, like if it stays in between here and here, then I would expect it to test it again next month. But that's the idea. The idea is the selling is still there for now. Maybe that selling is now dropping, or maybe they're backing off. But this market, this is a real market. I would just be aware that if the market gets up here and starts acting wonky, you would take profits as a short-term trader. But I don't think anybody who owns uranium in this group is short-term. Okay, uh, let's go to our topic. Citibank raises the bar. Uh, well, yesterday we got a report after the broadcast, and it was actually a summary of report. And Citibank raised their price targets. Uh, let's just read it. Just read the words, right? Coming less than 2 months after raising their price targets for 2024, we have the new report summary out just yesterday, right here. Uh, and this is their report. I'm quoting their report, titled "Rational Exuberance for Gold and Silver Markets?" Question mark. We lift our 0 to 3 month price targets for gold and silver by 9% and 16%, respectively, to $2,400 and $28 an ounce. We further lift 6 to 12 month topside levels towards our bull case scenarios to $3,000 and $32 an ounce. Now, experienced metals people will look at that, and or let's just people like myself, let's just say, experienced and 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 skeptical will say, well, $2,400, that's no big deal. Uh, $28, well, we're there now. Well, but they're telling you that they accept that we're here. Usually it takes months for a bank to change targets to play catch up because they don't think it's going to stay there. So their 0 to 3 month price targets are being raised because they're trailing the market. They want to stay close. This is a bullish report, very bullish report. Because the price is right there. Now, the second part, $3,032 an ounce. Now, last month we showed you on here the $3,000 an ounce comment, and the mainstream media picked up on that as well. But they didn't really give a price target for silver or a spike. See, this is a spike. It's like it could go up as much as $200 in one day. We could hit $3,000 an ounce in a crazy scenario. But now they're adding silver in. And the first comment I'll make is that that's no longer a price spike. You follow? That's actually a target, in my opinion. It's a soft target, but it's a target. $32 an ounce. Silver people will look at that and say, well, I mean, that's if gold's at 3,000, silver is going to be higher than 32, based on the gold silver ratio. And several people have said that to me, and I'm going to address that right here. Nobody said it's going to happen on the same day. Okay. Meaning gold could go to $3,000 an ounce because it's central bank, it's geopolitical, it's war. You could have the knee-jerk reaction. And that knee-jerk reaction, silver might not move as much as you think it would. Okay. Because they'll be selling silver to buy gold. Now, I'm giving you the legitimate reason for that. The other reason is, well, banks aren't showing their hand on silver. They never show their hand on silver. Okay. I've said it before. Silver is more important than gold in many ways. It's militarily used. Uh, uh, they can't control it like they can control gold. They can't control it as easily as they can control gold because to them it's money, but it's more than money. Okay. It's a key industrial, it's a critical industrial metal. So they're not showing their hand. It'll go higher than $32. Just because banks are starting to be nice and give higher targets doesn't mean they're being completely frank. Okay? Moving on. BlackRock's weekly macro analysis. They put one of these out every week, and I share it with premium subscribers when I get it. Basically, it's assets in review, and you can see that picture there. You just pop that a little bit bigger, right? So basically, they have this is similar to the one that Hartnett does, but it's very clean. It's good. Now, they every week they have a report. The report touches on three levels, right? The biggest picture, that's a new thing, right? I think everyone's reading Goldfix now. They're not, but you get my point. Then there's the macro picture, and then there's the granular picture. So it's like they start to zoom in from outside. It's kind of like an Exter's pyramid, Um, uh, in reverse. So anyway, in this one, they're discussing three main issues, and those are demographics. So the working age population is declining in major economies. We favor economies that are better adapting and sectors set to benefit from spending shifts. They're saying that emerging markets are going to be growing financially, and they're going to be growing in economics. It's like the brick story. It's not untrue. Next issue: U.S. yields jumped last week, but U.S. stocks remain near all-time highs. The strong March U.S. jobs data supports our view of only two or three cuts this year. There's a meta statement in there. And that statement is, remember, these guys are in the business of selling stocks, right? That statement is stocks are still near their all-time highs and yields are up here. Be careful. That's what they're saying. They're not saying it, but that's what they're saying. The next one, we eye this week's US CPI. We see goods inflation pulling down overall inflation while services remain sticky. We watch for how soon the ECB will cut rates. All right, so no, real, that's just they're just commenting on CPI, and I would agree with them on that. Anyway, so the report touches on big picture drivers, things that we've covered here before. But this is not inside information, but it's very good, very good. Uh, Miners, price action, miners. Goldman says it's okay to own them now. Now, they didn't come out and say buy miners, but they have a new index coming out. That index is a kind of a back to the 70s index, and it implies, not it implies miners, but it says companies that are well run, that have secured their cash flow, and will benefit from a commodity bull market. Find your miners in that category. Those are the ones that they are buying. Market news. Well, we'll just read a couple of these. The full force of the moon's shadow crossed the United States, Mexico, and Canada on Monday as the first total solar eclipse in 7 years plunged the day into darkness and reminded all in its path of our planet's place in the cosmos. The New York Times. JP Morgan, this is more newsworthy. JP Morgan Chase Chief Executive Jamie Dimon warned that U.S. interest rates could soar to 8% or more in coming years. This got a lot of press attention. Sometimes he says things that make sense. Sometimes he says things that are just outright ridiculous, like I hate Bitcoin even while he's buying it. But in this case, he's really just underlying something that he said before, but he's saying it again, and the press is giving it credence. So he's preparing people for a non-rate cut. Next, TSMC's Arizona subsidiary is set to receive up to $6.6 billion in U.S. government funding under a preliminary agreement announced by the Biden administration on Monday. This was announced Monday, but it was talked about last year. It's part of the IRA. It's part of us going from a service economy, meaning a financial service economy, to a manufacturing economy. We're not just manufacturing, steel or cars. We're manufacturing chips, and we're manufacturing and refining specialty metals. The next economy. Chips are very big, and I alerted subscribers to this over a year ago, and I didn't think NVIDIA would do what it would do, but there you have it. So TSMC, if geopolitically the implications of this, TSMC's Arizona subsidiary, we are replicating, okay, Taiwan's industry here, right? And once we do that, then we can afford to pull out, right? Then we can afford to give China uh, uh, acquiesce to China's demands. The capability of new artificial intelligence models will surpass human intelligence in the next year. That may be true, but we're not going to have access to it. They're going to give us the dumb version. Blackstone has agreed to acquire an owner of upscale apartment buildings for about $10 billion. Significant in that this is macro, not big picture. In that apartment building has slowed precipitously. Starts of new building has slowed precipitously in the last 6 months, and they're buying up the supply. So we're back to the old 15-minute city stuff. We're back to the old, they're going to become your landlord. And you know what? They are. I mean, not your landlord, right? But they are. I mean, they're getting into it, right? And they're getting into it because if things go bad, the government's going to subsidize low-end housing. It's like a Section 8 play. Geopolitics. Oh, there they are. I'm not going to read these today, except to say that Israel has set their date to invade Rafah, I'm not trying to say it. Uh, the negotiations are still going on. I feel like there's some chicken going on here, but I can't, I don't have a good read on it. But I'll just say that all the geopolitics combined is walls built, bridges destroyed, and severance pay given as direct American involvement shrinks and its sphere of political influence recedes. So what does that mean? It means that in all the areas that we have a cop on every corner, we're slowly removing them. So in Israel, we don't know what's going on with Rafah. In Japan, we're facilitating Japan and Australia. Where is that? See this here? This is Asia taking care of itself. We're not pulling out. See this here? We're assessing and giving information to Israel. We're slowly pulling our police off the corner for good reasons. And those reasons are we need to take care of ourselves. The problem with that is the destabilization that comes from it if it's not handled properly. And you're seeing that in the Middle East. Israel feels maybe a little bit abandoned, or put it this way, they feel that they have the right to not wait for our permission anymore. Anyway, data on deck, Tuesday, NFIB Optimism Index. I don't really feel that there's maybe people will care about that, but I don't think so. Tomorrow's CPI, that's what people will care about. And at the bottom, we have Citi's price target and explanation and BlackRock's weekly macro report. That's it. I'm Vince. Have a great day.
Thanks for watching this morning's Markets and Metals Update with Vince Lanci. Brought to you each day by Miles Franklin Precious Metals, where this week's special is 1 ounce 2023 dated silver Cougarans for only $3.10 over spot. Cougarans come from the South African Mint, one of the 6 major sovereign mints, and are IRA eligible. Find out more by calling Miles Franklin at 833-326-4653 or email us at arcadia@milesfranklin.com. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.